Welcome, and thank you very much for agreeing to talk to us.
Thank you for inviting me.
I see it's quite, we are expecting about 100 people who have registered for the webinar. So we are here to talk about the regional economic prospects published just yesterday by EBRD. So this is an updated, obviously, document. It's coming almost after a couple of other IFIs have published their versions. So jumping right down to it, I just want to get your key messages, perhaps, within this latest publication that you want to convey to the general public. We have representatives anywhere from the government, Uzbek and international, various other countries, to legal firms, to consultants, and I see also some people from the European institutions here attending. So what are the key messages that you'd like to convey with this latest publication?
Well, I guess there will be many different messages at different levels, and it really depends on where we want to go with this. But if we focus on Central Asia for the moment, I would say that on average, Central Asia, will definitely have not the easiest time, but at the same time, when we compare to other countries in which EBRD operates, the damage seems to be fairly low, again, in relative terms. The highest damages are actually incurred by countries in Central Europe, the Balkans, countries that have been to a much larger extent included in global value chains. So a country like Slovakia, for example, which a very large part of it was about manufacturing, dependent on supply of inputs from outside. So, it has seen a tremendous drop in activity. Also, we see a lot of damage in countries that are very, very heavily dependent on tourism. And again, that includes countries like Georgia, where I am now speaking from, but also Croatia, Greece, countries in Europe that, sometimes 30–35% of their GDPs come from tourism. And now with nobody traveling, you can imagine what is the extent of the damage. But for Central Asia, go back to our region, it seems modest or moderate rather. I can give you the figures, so maybe you have them. So on average, we're looking at a recession of this year of 1.2% for the region as a whole, and that will be followed by a rebound, quite strong actually, of 5.8% in the year to come, in 2021. And again, let's just compare it for context. So again, minus 1.2 in this year, and this compares to minus 3.5 for the EBRD region as a whole. So that's good, I would say. And the rebound is also stronger. So the rebound in Central Asia is 5.8. as opposed to 4.8 in other EBRD countries. Let me also say a couple of words about Uzbekistan, since I guess this will be the main focus. So Uzbekistan is really exceptional. It is, I would say, the star of our forecast, because we don't actually foresee Uzbekistan declining in output this year. It will still grow, even though not at the pace that we could have expected in the past, but we still expect 1.5% growth this year, and an even stronger rebound, 6.5% rebound in 2021. So this is really a good result for Uzbekistan. It's an expression of confidence, I would say, more than anything else, in the reforms, in the potential of the country. And it seems like it's been taking some gambles the last few years, but these gambles are likely to pay off.
Speaking of Central Asia as a whole, of course, we have certain processes which have been ongoing in terms of integration, not integration, I say increased partnership, economic activity between the countries that we have not really seen in the past, but also major reliance on some neighboring economies like China and Russia, which probably have significant impact on the Central Asian region. So before I go into focus on Uzbekistan, I want to check with you. So China is back online. We are now in middle of May. The long-term impacts, Uzbekistan particularly, we saw still growth in Q1. So based on central bank data published a couple of weeks ago, Q1 GDP grew still by 4.1%. Although you have exports which have significantly decreased, the economic activity in general, you have particularly concerning is exports. And many countries, as you know, from Central Asia, are quite heavily dependent on exports to the neighboring large economies. So in terms of the effects coming from not particularly the COVID itself, but specifically decline of the economic activity with those countries, how large is the impact out of the entire that we are seeing?
Well, this is the most of it, actually. So you're absolutely right. For some countries, again, the specific channels are different. So for, it's obvious, for Kyrgyzstan, Tajikistan, the channel is not, it's mainly about remittances from Russia. For Kyrgyzstan, I would add trade with China is very important because many of Kyrgyzstan's re-export activities depend on inputs from China. So that is an additional connection there. For Uzbekistan, China is important as an export market, mostly for its gas, I would say. But also China is a very big buyer of Uzbek services, actually, transportation. It's actually a very big component of Uzbek exports. It's the export of transportation services. And China is a key buyer of these services. For other countries in Central Asia, China is mainly a buyer of energy resources like oil, gas, from Turkmenistan as well, some textile from Uzbekistan, and so on. So, but China is clearly a very important actor. The same goes for Russia, but again, in different ways, different products, and remittances is a specific Russian influence. So absolutely.
So this is the data that you have published yesterday. So this is the Central Asia, and specifically, okay, Uzbekistan is indeed looking much better than the neighboring countries. What are the key reasons you think that we see that kind of picture?
Sure. So for Uzbekistan specifically, the main advantage is that it's much more diversified than any of its neighbors. And when I'm saying it's diversified in several ways. So first of all, in terms of markets, I said just now that China is the main export market for Uzbekistan, but the share of China in total Uzbek exports, it's only 14%. So that in itself means that even if China, goes down for some reason, you still have other countries. Russia is very big, Turkey is very big. You have neighboring countries, Kazakhstan, a very important partner, Tajikistan, Kyrgyzstan. So there's quite a bit of diversity in terms of markets. In terms of products, Uzbekistan is also very diversified. So we are looking at a very sizable share of industry, manufacturing, mining activities, construction. about a third of the economy. We have a very large and quite successful agriculture sector. And even though commodities are still very important, of course they are 50% of Uzbekistani exports. Half of these commodities are in fact gold. Now, it's probably the best thing you can have at the time of a crisis is to have gold among your export commodities, because gold, when everything else goes down, gold goes up. So it's a natural hedge, if you wish. So that is sort of a couple of advantages in terms of diversification that Uzbekistan has. But let me list a couple of other very Uzbek-specific factors that, in my view, will play a role. One of them is something that is, I would call it social capital, and the fact that Uzbekistan has the mahalla structure, the fact that people are helping each other, they're organized. I was myself very much impressed with Uzbekistan the very first time I visited, just seeing how clean the country is, how clean the neighborhoods are, and the rural areas. And that is very much, you know, I think it's a very important factor when dealing with crisis such as the pandemic now presents us. And by the way, what is important is that the state is not trying to destroy this social capital, but actually uses it in order to, for example, deliver social assistance and deliver an effective social safety net. The other factor, and again, it's very specific to Uzbekistan, it's the way the government has been approaching the economy the last few years. For example, the notion of clusters in agriculture. What it means essentially stability, because when you are looking at clusters, what is it? It's a situation when you, as a processor of, let's say, agricultural products, you need raw material, but in a cluster you have this raw material from the neighboring community, if it's about agriculture. So you don't depend on the outside to supply you. Instead, you have it right next to your production facility. And that, again, that's stability. That's a kind of insurance in a time of crisis. And generally speaking, you know, even though trade is very important for Uzbekistan, it's about 80% of its GDP, and Uzbekistan, of course, has to import a lot of, you know, a lot of raw materials and other intermediate factors of production. Still, it is quite a bit. It has quite a bit of self-sufficiency. So it has self-contained, I would say, value chains within Uzbekistan, you know, where you have the raw material and all the processing stages within the country, which gives you an assurance of stability at a time of crisis. So these are just a snapshot, but I believe gives you a good sense of how we see Uzbekistan.
Mm-hmm. Now, okay, you have touched debt and gold. Okay, Uzbekistan indeed has quite substantial reserves, and most of the, let's say, quite substantial part of the reserves that the country has is kept in gold. However, the country has also sold almost $1 billion, you know, US dollars worth of it, and I believe it may be continuing in order to mitigate the consequences, of course, of the current economic situation. The first quarter was good also because the gold prices are going up
Yes.
substantially. Once the crisis subsides, that may be the reverse case, where while the first quarter was the gold prices helped actually rebalance the figures on the economic results, it may be the reverse case.
I understand. I understand. You know, gold is something we call counter-cyclical product. Yeah, so it goes up in price at the time of crisis. It goes down when everything else is going smoothly. Mm-hmm. So you cannot rely on gold so much in the recovery stage. But look, I don't think Uzbekistan depends on gold as much as we no, this is not really the case. Look at how fast the economy was expanding in terms of credit in 2019. Now, if you compare December 19 to the previous year, credit expansion to the corporate sector was about 26%. Okay. Now, what does it mean? It means that every business is essentially is a little tiger, you know, ready to jump. You know, you are taking credit in order to do what? In order to expand your capacity. And it takes you some time, of course, to achieve the expansion of capacity, but eventually it will happen. Now, this is a, you know, this is a little bit of a gamble, as I may have said earlier. So if the crisis gets extended and businesses are leveraged to a large extent, of course, we may see difficulties in meeting the debt service costs and so on. This will be something that the government will have to step in and help, perhaps. And the banks would probably have to reschedule, restructure, extend maturities and all that. So there is an element of risk. But at the same time, you know, I believe that this is a train, Uzbekistan is a train that nobody will be able to stop.
It's a quotable term. So one more question then about the debt. Let's continue this way. Debt. So now Uzbekistan has said the Ministry of Finance was gave a conference call with investors a couple of weeks ago, where they have informed that okay, this obviously the country will have to take additional debt. Obviously, the ceiling has to go up. And they have projected that it's safe to increase the ceiling of debt to GDP to 50%. What does your bank think about
that? You know, we don't consider Uzbekistan to be in a high-risk group in terms of sovereign debt. Other countries in the region, such as Kyrgyzstan, Tajikistan, and we also cover Mongolia, they are in the sort of high-risk group for us. Uzbekistan is not. Also because it still has a fairly modest level of debt to GDP. Even if it goes to 50%, it will still be manageable. But also because of the dynamics of the country. You know, basically we you know, as always, this is a matter of trust, and we trust Uzbekistan for the moment that it will be able to put debt on a sustainable path. It will not allow debt to run amok, out of control. And, you know, the economy will catch up, will grow, and the debt burden will go down over time. We are, I don't know if you know, but we are currently, our portfolio in Uzbekistan has broken the $1 billion
the threshold. Yes, indeed.
Yes.
We have discussed this with Suma Chakrabarti, I think, just a couple of months before, in an interview that we did with Uzbek Review in Tashkent when he was visiting last time. So, of course, how does the bank see an impact to its own projects in this situation? Obviously, force majeure situation is in place. You do have projects which are planned, but those which are already running. So what impact are we expecting to see in terms of timing, in terms of maybe even re-evaluation of certain things?
Look, our projects so far, about 80% in terms of volume, have been focused on public infrastructure. Mm-hmm. So we've been mainly focusing on things like, you know, water, district heating in cities. We've been working on energy in the energy sector, on transmission lines, on green energy. So that was about road infrastructure. So that was about 80% of our portfolio. And the other 20%, they were manufacturing services in agribusiness. This is roughly the division. but in the current situation, you know, the needs are to essentially deliver liquidity quickly. And we are doing that mostly through our partner banks. So we have offered about 220 million so far. This is, we call it our solidarity package assistance. So 220 mostly through partner banks. I think we have 6 of them. And this is about credit lines to SMEs. And this is also about trade finance, which is a very important aspect of our business in Uzbekistan.
So are the, let's say, what about those infrastructure projects which bank is co-financing? Do we expect substantial delays?
No, not necessarily. Not necessarily. We actually don't expect delays. I mean, we hope that the consultants will be able to arrive in Uzbekistan quickly in order to conduct the necessary assessments. Even if they cannot come within a month, we may be able to use local consultants for the same purpose. And that should allow us to launch all the projects roughly in line with the original timetable. So we definitely don't expect major delays.
Right. Well, what about investment activity in general? Your opinion? Look, first quarter 2020, we have a factual figure which has been published by the central bank, which is investment down 10.2%. And is that purely, let's say, second quarter would be hard, would be probably harder, not only for Uzbekistan but for everybody. Now, those private companies that were going to invest into developing countries may reconsider, and I want to broaden this question not only to Uzbekistan but to the region and actually all EBRD countries. How do you think the investment, the private investment, would be impacted in terms of in the developing, emerging markets? That covers.
Right. What we observe, I can tell you first of all what we observe for the moment. We observe that most banks in most countries in which we operate, they tend to sit on liquidity. So there's not so much, you know, I think it's both sides. It takes two for a tango, and in this case, it's really both sides that are a little bit reluctant to engage each other. So we have banks who don't have a lot of appetite for risk in the current environment, and they would rather keep their money for later. And at the same time, you know, if you think as a business person right now, is this the time to think of new projects or new activities? At the moment, everyone is just, you know, sitting and waiting to see how things evolve. And so there is a delay of 2, 3, 4, 5 months in decision making. And this is at the minimum, okay? Now, of course, there's going to be some longer term influences on the business as such. You know, certain activities will get disrupted altogether. And I don't know, tourism this year, hospitality, a lot of services. The damage is so serious that it will take them maybe a year to regroup and recover. And some businesses will not exist after the crisis. So the owners will probably have ideas for which new businesses to create, but it will take them time. So definitely investment will go down at a time like that. And it's global. It's nothing to do with Uzbekistan or Central Asia.
Indeed. So I think this is the projections that we are yet to make, because it's still difficult with all the variables in play. I think it's still something that, you know, projections may still change quite substantially over next weeks. So what I'm going to do, I'm going to share the slide again. Can you see that? No.
Barely, but if I take my phone in my hands, I might be able to see. Let's see. Yes, I can see the slides.
Okay, so some of these are the projections, your projections compared to um, those of other IFIs. And we can see in particular, I want to see that you have also changed from November 2019 substantially Kyrgyzstan and Tajikistan.
Absolutely.
Do we see, I mean, broadening again, going back from Uzbekistan, because we have audience which is much wider than only Uzbekistan today. What are particularly what specific factors that cause such a substantial revision for Kyrgyzstan and Tajikistan especially?
Look, let us start maybe with Kyrgyzstan. So this is a country that has over 20% of GDP in remittances, number one. And this is going to slow down very significantly. The SME sector is about 40% of the total, okay? So SME sector, you can imagine what's going to happen in the current environment. And by the way, the impact is very region specific. I looked at the aggregated data, and much of the impact is concentrated in, for example, the Ash region on the border with Uzbekistan. So in March alone, there was like 50% decline in activity. And it's mostly SME activity there. Mm-hmm. And on top of all that, the Kyrgyz government actually did implement fairly severe lockdown or social distancing measures, which other countries like Tajikistan didn't do. Mm-hmm. So that is something that will really weigh on the Kyrgyz economy, especially that Kyrgyzstan doesn't have the kind of resources, the buffers that its neighbors have, Uzbekistan and Kazakhstan. So that is going to be the story of Kyrgyzstan. We see it declining this year by more than other countries, by 4%, and even that may be subject to another revision. Kyrgyzstan also was the first country to receive assistance from the IMF, and it's sizable. It's about 240 million, 2 tranches. The second one, I believe, has been already approved or is about to be approved. So that is helping, but still Kyrgyzstan will be severely hit. Tajikistan is a slightly different story. Well, remittances are even bigger in Tajikistan. I think it's above 30% remittances. It's a very populous country with very, very strong demographics, and it cannot create jobs at the pace at which it creates people. And so a lot of labor migration to Russia. Now, Tajikistan was very, very late to admit to having the coronavirus on its territory. So just now, even today, in fact, I heard from my colleague in the EBRD that people actually in the expat community have died from coronavirus just the last couple of days. So we don't know what's going to happen in Tajikistan going forward. If the pandemic is going to hit it in a major way, we will definitely revise our forecast downwards, unfortunately. For the moment, given that there was very few cases reported, given that the country did not implement severe or tough lockdown measures, we didn't anticipate as much of a decline. So our forecast is only 1% minus, okay? But again, as I said, it may be revised downwards. With Tajikistan, just to add, the IMF also stepped in. There was a very recent announcement. The package is going to be, I think, 180 million for the moment, plus some debt relief. This is going to help. But what is also going to help is that the IMF will make sure that the Tajik government will use, I would say, fiscal discipline in the future. Because as part of the negotiations, the government of Tajikistan took upon itself a commitment to cut what they called non-essential expenditures, which is primarily about financing the Rogun Dam.
Right. Okay, I will thank you for that. I will jump to a question which is coming from the audience, which is actually also on regional cooperation, which is how the recession in Kazakhstan, one of the main trading partners of Uzbekistan, will affect Uzbekistan specifically. So the trade has been increasing between the two countries substantially.
It doubled.
And how would you answer that?
Definitely not a good thing. I will not try to quantify it because we haven't done any work on this specific aspect, but very substantially. I looked at data for the first quarter, which is publicly available. You can see that trade with Kazakhstan has already declined, and this must have happened just in the month of March. So April is going to be worse. May, probably same story. And Kazakhstan is very important, especially for agricultural products. So the lion's share of agricultural exports from Uzbekistan go to Kazakhstan. Also, Kazakhstan is important for imports. You know, for example, Uzbekistan was importing Kazakh grain and was processing it into flour in order to re-export to Afghanistan, for example. And Kazakhstan has recently limited such exports, and that will affect Uzbek flour mills. Mm-hmm. But these are just examples, of course. Overall, very negative impact. I think Kazakhstan was a fantastic market for Uzbekistan.
Right. Hopefully it still will be. This kind of the processes of economic partnership and integration we have not seen in well, ever. And frankly speaking, this is something that in Europe particularly we have great hopes for.
If I may comment, you're absolutely right. You know, we sometimes do in economics modeling that is called gravity modeling. So you look at countries that are sitting at different distances from each other, and you look at the intensity of cultural, linguistic connections between them. You look at some other characteristics, for example, you know, if the ethnic minorities that are, you know, from one country present in another. And if you look at all these factors, you can essentially run a model. It's called gravity because it's like planets pulling each other, right? So you find that any gravity model will predict much more significant cooperation and trade between Central Asian economies, much more than it is today. And so the potential is very large, and it remains unutilized. Somewhat, it's a matter, to some extent, it's a matter of time, very simply. To some extent, it's about making certain investments in infrastructure, such as roads and railroads. And to some extent, it's about very simple things, regulations that are, you know, these are the easiest reforms you can do is to simplify the regulatory environment, to remove some of the barriers so that countries can cooperate, trade, exchange people and ideas.
I remember I had a question for a European official, one of the commissioners, about 5 or 6 years ago, saying, look at Central Asia. It's been only 20-something years and we have gone so far apart. We're so different. And he has answered, Oybek, it has been only 20 years. That's why we have gone so far apart and have become so different. So indeed, as time goes by, it's inevitable really that the opportunities that are close to us are going to be seen probably in a much more proper light as they should be. We have a question from the Istanbul PPP Center of Excellence. What is the situation now and your forecast for the PPP in Uzbekistan?
Yeah, I am personally a strong believer in PPPs. So thank you for the question from the PPP Center. We have worked in Uzbekistan. EBRD specifically assisted the government with PPP legislation. This was one of our technical assistance projects in Uzbekistan. And there would be fantastic scope for PPPs across many, many areas, you know, from roads to even things like agriculture.
Thank you for that. So going maybe broader, I will bring my last slide. So this is a table which has been published by The Economist about a couple of weeks ago. A very good article looking at how emerging economies would cope with the impact that we're seeing. It ranks the various countries in terms of their capacity to cope with the COVID crisis. And only Kazakhstan was up there, unfortunately. It looks at public debt, it looks at foreign debt, it looks at cost of borrowing, and it looks at reserve cover. So the slide should be coming up again shortly.
I can see it.
You can see it. Okay, excellent. How would Uzbekistan, you think, rank on that document, on that table?
Well, below Kazakhstan, for sure. But I don't know exactly where it would be. I can see Egypt there. The sample of countries is difficult for me to figure out.
Right.
So the situation in Uzbekistan is not so bad, but you know it doesn't have the kinds of reserves that Kazakhstan has. Kazakhstan, you know, I don't remember the exact percentage as a share of GDP, but very substantial. Kazakhstan is also running trade surpluses, unlike Uzbekistan. Uzbekistan is $6 billion in trade deficit last year.
Yes.
So basically, this has to be financed somehow. And this somehow, it can be borrowing from abroad, it can be remittances to some extent, it can be, remittances is probably a very big part of it actually, plus some borrowing, some grants, but it's not the same thing as having a steady, you know, a solid exports of oil and gas for the moment. You know, this is something you can really build on. And this gives investors and everybody confidence that you can repay. So Uzbekistan is in a more precarious situation in this regard, but it's not in a bad shape because, again, the level of public debt, of external debt is not so high.
I want to get the data here as well. So exports for gas, particular for the first quarter in Uzbekistan, were down about 30%.
China, mostly because of China, yeah.
Right. Cotton yarn as well, a whopping 46.9%, and metals down 20%. So this, of course, is data which is within your report, but still, I want to, you know,
right.
People will watch it without having had the background. I'd like to have that. I had the data for the deficit, but I do not find it now here. But it's over. I would not dare to make an announcement without looking at the data. And projections in terms. So finally, projections for recovery. This is the final question I want to talk about. V-shape, U-shape, the bathtub shape, or the L shape for Central Asia. How do you foresee the recovery? Not only to recovery, general recovery, but to the levels that would have actually been achieved if the virus had not been there?
Again, for Central Asia as a whole, the projection is of, by the way, let's put it more generally, it's for the EBRD region as a whole, all EBRD countries, we project a V shape. And for those who don't know, this means a fairly sharp, quick recovery. But again, it will take until roughly middle of next year for domestic and external demand conditions to return to normal. And the same goes for supply. So it will take time. It will take time.
In terms of 2 years, I think that's still quite interesting and conservative. I mean, quite good. Let's put it simply, compared to the developed countries. We see
Right.
here in US, we see in here in Europe that it will take, even with a V-shaped recovery, it would take years to come back to the situation which we would have had if this has not hit the...
Yeah. Central Asia, there's an advantage of backwardness. Let's put it this way. You don't have very sophisticated economies that depend to such a large extent on the outside world. So we are mainly supplying raw materials to the rest of the world, food, and that is not going to disappear. People will still need energy, people will still need metals, people will still need food, and we will supply these needs. We will receive less tourists, yes, and we will be getting less remittances. So we will go down, and it will take us a while to recover. But the process of recovery will not be very, very complicated. Again, if I'm looking at an economy such as Slovakia, the example I used earlier, I cannot even assess how long it will take for Slovakia to recover, because it really depends on how the whole, auto industry will look like in a year or 5 from now. Will countries continue offshoring production, or will there be a trend towards reshoring? These are big questions for which we don't really have good answers for the moment. So for the more sophisticated economies, the impacts are difficult to predict, but they're going to be large.
Thank you for that. So I'd like to close at the moment. I see there are some questions, unfortunately, that we were not have been able to answer, but please do send it by mail, and we'll try to get that answer to you. Thank you very much, Eric. It was an absolute pleasure to talk to you. Although we're not quite ending on the high note, possibly, but this is the reality. We do have to get used to the new world order, frankly speaking, in terms of economic, at least, reality.
Oybek, I think there are many positives in the current situation too. There's absolutely no need to finish on a sad note. I mean,
let me catch you on that. What is the most positive outcome for the world post-pandemic that you can foresee, personally, as an economist?
For me, it's completely unrelated to the EBRD as such, but in my view, what is going to happen is that we will see a digital revolution in education. And this is going to be tremendous impact, especially for developing countries, because developing countries for ages were not able to catch up in terms of the quality of education that is available to kids. Especially think of rural areas, right. Think of small towns. They're absolutely impossible to close the gap. It's also because of brain drain. And now I think, technology has been there for quite some time, but now we have overcome a certain psychological barrier, and we have got used to the technology that is available. And I see a major revolution happening, essentially solving a huge bottleneck and really, really helping developing countries close the technological gap eventually with the West. So this is positive, isn't it?
Absolutely. Uzbekistan, there has been a meeting just a couple of days ago chaired by the president, where the entire digital strategy for the country is now being revised in terms of getting the internet to the farthest corners, getting the education platforms, digitalized, and making, yeah, indeed, we'll come out stronger out of this, certainly. Every country will.
Whatever doesn't break us, makes us stronger.
Indeed.
Absolutely.
Thank you very much.
It was a great
Eric.
pleasure.
It was an absolute pleasure to talk to you, and I hope to see you soon in Tashkent or possibly in London. Thank you. Thank you, everyone.
All the best.
And the recording will also be made available. Thank you.
Thank you.